Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
Welcome back, everybody, to our Investor Club Roundup, Part 2 with Larry French, Lisa Hoegler, and Dan Redig. Hope you enjoy. All right, so let's assume that we're all running an old traditional club and you guys have a monthly speaker every month. All right, we'll start with Lisa. Who is your dream guest, living, dying, living or historical, in real estate, not real estate? Who would you want to bring to speak to your investors?
Ooh, that's a good one.
That is a tough one, isn't it?
That's a tough one. Because some of the old guard,
I've had, by the way, one of the owners answered Marcus Aurelius.
That's smart.
way back in the day.
Genghis Khan.
Some of the old guard is just too difficult to understand. Like they talk in circles, and it's just kind of difficult. That's a tough one. Who would I bring?
Let's get back to you, Dan. I'm gonna put you on the spot.
Talk to me.
I got to say we love having Bruce. But if I can't have Bruce, I'm going to have Pete Fortunato.
Okay. Have Pete, you always learn something new every time. He's like...
Every time. Yeah. Or Bill Cook, for that matter. Bill Cook is another one of those who really, really gets it going and shows people the way.
Yeah. Well, let's go. When was the last time you had him on? Have you ever?
Bill's been a while. Yeah.
Okay. Well, let's...
I'd actually have to look that up. I don't know.
Yeah. What about you, Larry?
I'd stick with the Florida theme, Dan, and I'd want Jack Miller.
Okay.
Ooh.
Yeah, Jack Miller was wonderful.
The mentor's mentor.
Now, Jack was fantastic, too. Yeah. I mean, you guys are going way back. I think I would probably stick with somebody who's around. And like I said, I think I'm going to go back to George Antone, which is not, and nobody's really heard of him as much. You know, he's not as big of a name. But I would, if I had to go give credit for being the investor I am to one person and absolutely being an incredible mentor that understood things from 10 different directions at the same time, it would be him. So if everybody had the opportunity to learn from him, I say take advantage of it. He's one of a kind.
Now, I've seen you guys whenever we put out a seminar. You guys are always, some of the first to sign up and to come. Do you guys at this point still go to educational seminars? What are you guys doing to stay in the game and stay educated? And I'll start with Larry.
Yeah, so I go to most Norris Group's event stuff still, and because I still get value, and I love you guys. If it wasn't for Bruce and his team, I literally would not financially be where I am today. So there, and then I go to the Masters of Real Estate, which is held in Las Vegas once a year in November, run by Gary Johnston. And he usually fills it with a lot of the Florida guys we were just chatting about and other smart people. And then up until Dyke Spotiford passed away a year and a half ago, we would fly to Atlanta once a year and take his advanced strategies class, which was much more tax and structure based. It wasn't about how to go find your deals and how to put your deals together. It's for people that are already good with that, and they need to, lean to do stuff.
Hang on to the wealth.
Yes, that's since been taken over from John Heyer, and I have not been since he's taken it over.
Okay. Dan, you still going to education?
Still going to education. There's a couple books I have that I still revisit, but not so much anymore, right? They're getting to be kind of dead. But a lot of stuff local, actually. There's a couple of other folks running small groups that are really focused very narrowly on a niche that I enjoy going to. REIA is one of them. Bill Tan's calculator class is always solid gold. Can't get enough of that. But otherwise, I pick 1 to 2 events every year that I try to go to. So I don't have a favorite because I try not to repeat. So I'll look around and see what's interesting. Where am I going? And so this year I'm looking more towards stuff focused on raising private money or doing syndication type work. So I'll have to see what's out there for the fall when I go.
Nice. Lisa, what are you doing for education?
Yeah, actually, I've shifted in the last couple of years, because I would say up until about 2 years ago, I was still heavily attending all kinds of events all over the country and masterminds and that kind of thing. And I started going to the classes and realized that aside from things like the Norris Group that are timely and talking about what's going on in the market, I started realizing that I could give a lot of the seminars I was going to. And that had happened partially because at my REIA, I've done a lot of teaching. We used to have almost 6 classes a month, and I was doing in-depth teaching on tons of topics. So between my own personal experience and then having to put together a unique curriculum, I really had learned a lot of stuff. I'm a lifelong learner kind of a thing. And so what I've started focusing on now is a little bit different areas that I don't have as much experience, like what's going on with AI and real estate. How do I use some of my own Excel and that kind of background that I have to do more with real estate and or just do more in general. So I'm branching out into a little bit different areas that I didn't have as much experience with, because the nuts and bolts of how real estate works, I got that. I checked those boxes. Now I want to kind of supplement with the rest of the tools that can help build a business even more. And those are things I can share with people as well.
Sure. I shared with you guys off before we started recording that I've read quite a few books. The last book I read is really interesting. It's called The AI Driven Leader. And it's basically, the thought is that there's no getting around it. AI is here to stay, and it's going to come like this huge wave. But what we have to focus on is how to make AI our thought partner and keeping us the leaders. And always being the human in the room. So it's a great book. I would highly recommend it to you guys and to all of our listeners. It's a great book. So I want to touch a little bit about what's going on right now. We've always had the moodometer. That's Bruce's big thing, right? What's the mood? What's the buyer's mood? So with everything going on, the volatility in the stock market, the ups and downs, the tariffs, new administration, everything going on. What do you guys think the mood of real estate in general and real estate investing is right now? And I'll let whoever wants to jump in first go ahead and take the lead on this.
I'll jump.
Yeah.
The mood.
Well, you have the Port of Los Angeles right there, right? So
we do. And actually, we have a whole bunch of longshoremen in the group, so they're not so happy right now. I don't think the mood is good. I don't think the mood is very optimistic for the future. Now, great for investors, right? The investors are sitting here. I see them salivating. It's happening, right? And I know for myself, I've been investing for a long time, but I didn't do that well in 2008. Unlike Bruce, I kind of took the wrong path at that time. And I've been waiting for the cycle to change so that I could actually take advantage of opportunities that are out there. So I see the real estate investment market a little bit excited about it. It doesn't always translate to clubs, because usually when the market's turning down, people sort of stay away from clubs. They're a little nervous. They're a little
it's
scared.
not easy at that point.
Of course, but it's really an exciting time to be in it for sure. I think from a retail buyer, I would say one of the things that I feel like is so shocking to me this time is that it always feels to me like real estate is sort of like a late mover. It's sort of last to react to whatever's going on in economics. And I think what I'm seeing, at least in my market in the South Bay, is that we're seeing the impacts of it already. I mean, in full force and no delays. And we haven't seen the worst of maybe the economy, in the charts yet, but we're feeling it hard already. So I can only imagine what's coming.
What's the mood like in San Diego, Dan?
Kind of similar to what Lisa's describing. People are apprehensive. They're nervous. They don't know what to expect. Right. That fear of uncertainty certainly rearing its head. But the same sentiment amongst the investors. A good buddy of mine, Alec, caught up last week. And he was telling me it's coming. Here we go. Very excited about maybe some more opportunity because finding deals has been hard for a while. But that said, San Diego seems to be holding strong.
That's what's got to be so confusing, right? It feels like like some doom is coming, but pricing isn't going anywhere in California.
Right. Well, it's almost like 2018, if you remember that.
Yeah.
When we were thinking this has got to be a downturn again, and it held steady. And then 2019, things started moving a little bit more. And then, of course, the pandemic changed everything. So I don't really compare that. Different story. So, we just got a jobs report. It looked awesome in San Diego. What am I going to say, right? Everyone wants to hear the doom and gloom, and they're going to get this downturn and have this buying opportunity. Pick up their STRs or their long-term rentals or whatever it is that they want to do. And I frankly, I don't think it's coming. The economy at large would have to take a large and sustained hit before San Diego took a dramatic downturn with the way it's looking right now. I mean, famous last words, right? Call me next week when I'm crying.
Well, I think that's why a lot of people are just looking to add value somehow, some way, whether it's, square footage, lot splits, ADUs, things like that.
Yep.
So, Larry, what's the mood out in the desert?
Blah. Yeah, nobody's quite sure what's going on. So, I mean, there's opportunity for sure. Remember, I was talking about how we have a lot of tourist buyers. Well, the Canadians aren't real excited some of them aren't real excited to be here right now.
And we're seeing that in Florida too.
And so they're selling, and it makes sense for them to sell. What is their dollar? The conversion's $1.45 to $1. I mean, that sounds like a jackpot time to sell your Coachella Valley house. And that would the question would then be, well, who would buy it from you if you're a flipper, or who would live in it if you're going to keep it? The Canadians are they attracted to a type of house you'd even want to hold on to? Or is it going to be something in an HOA with 20 pools because they're coming down here to have fun? That has an outrageous HOA or a security, 24-hour security that just blows your return. So I would just say it feels like a great time to buy. Like, for instance, in Yucca Valley. Yucca Valley is the valley just above us. We're Coachella Valley, we're the low desert. Yucca Valley is 30 minutes away, 20 minutes away.
Joshua Tree, right?
Correct. Joshua Tree, 29 Palms in the city of Yucca Valley. Right now, Yucca Valley has 850 active listings. Last month, they had 85 sold. 85 houses sold out of almost 900 listed. Yeah, and it's they have 12 months of inventory up there right now. Yeah, it's a full-on buyer's market in Yucca Valley right now. Rents are low. You better buy low if you're going to keep that. Yeah, not necessarily a lot of people excited about living or buying a second home there, but they do. I mean, it's a beautiful area. People will buy it. So I think the key would be, at least where we're at, there's some deals here. Just how are you going to hold on to them? Are you going to, if you can find, when deals show up, at least my experience, when deals showed up in 2009, 10, 11, 12, it wasn't a matter of finding the deals. It was a matter of finding the debt that allowed me to keep them. And so I would work, like Dan was saying, maybe he's going to do a little work on raising funds this time around. It might be, if you expected a market cooling, which we're feeling now here, I would put work into finding some money to take advantage of that.
Well, one of the things, I've heard a lot of club owners and just investors in general is knowing your numbers, staying in your buy box, and being honest with yourself. Because, it's when you go outside of that is when you get in trouble, you get yourself hurt.
Right. 100%. FOMO is a thing.
Yeah.
Hit you every time, right?
Yes.
All right. What do you think the outlook for the rest of the year is? It still just up in the air because nobody can figure out, when it's going to go one way or the other, or how do you think the rest of 2025 will end?
I personally think it's going to be really slow all year. I think it's going to be very, very slow. And I think because of the slowness, we're going to see a lot of opportunity. If you're positioned right, if you're familiar with doing creative financing, if you have capital sources, you're going to have no problem buying. I give people kind of an antidote because it's just good to kind of compare. I'm on a whole bunch of wholesalers lists and whatnot for a variety of different kind of properties. And where I used to get maybe 5 or 6 a week, right now I'm currently getting no less than 50 a week. So the volume has ticked up considerably. None, they're not deals. They're not things that I would rush out to buy.
Situations. There's situations.
Yeah. But what
Their situations. It's
every
great.
time I ask the question, what's going on? When I'm asking the wholesalers what the situation is, it's people are we've been in such a seller's market for so long. Sellers are very impatient. And so they're saying, oh my gosh, I've been listed for 30 days. I don't have an offer. No one's coming to my open houses. I've got to sell. I'm desperate. And so I'm seeing the desperation tick up considerably, even though we don't necessarily have any other factors in the market that is
Been spoiled, right?
Right now. It's literally a perception thing. And that desperation is super palpable right now. So I think we're going to continue to see that as days on market goes up, as the market softens. I don't know what's going to happen with liquidity as the year goes on. I got to assume that lending standards are going to tighten, and then that's going to add to that perception. But I think the sellers' eagerness to get out is definitely going to do a lot to push the market down.
Larry, you were going to start talking about how you thought 2025 would end.
Yeah. I'm with you, Lisa. I don't see big changes. I don't see any reasons for big changes or swings in the market, just kind of floundering around, flopping around. Hopefully the current administration won't print a bunch more money like the last, we've been doing for the last 10 years. That'll just add more money chasing dumb deals. And support prices. I don't think we need lower interest rates on conventional stuff. I think the market needs to adjust to it. That would be healthier for the country if prices adjusted to 6.5%, 7%, and they're making their way there.
Which is the median if you look at it over the last 50 years.
Where it should be.
Yes. So hopefully that continues. I believe we're kind of slowly tumbling that way. Hopefully that continues on. I would say I keep an eye. You want to keep an eye. I like to keep an eye on outlier markets that I feel will feel pain earlier than more desirable markets where some of us might, where we work more. So for instance, I mentioned Yucca Valley. Yucca Valley felt much pain earlier and harder during 2009, 10, 11, 12 than the Coachella Valley, and a whole lot earlier and harder than Corona and Orange County and Yorba Linda and, in Mission Viejo, and as you get closer to the coast. Other areas that have similar characteristics is like Adelanto in Apple Valley. You keep an eye. If you're starting to see 40% off in Apple Valley compared to just 18 months ago, there's some pain either coming or it's about to get here. So I like to watch those outlier markets to help give me an idea what's going on. The other thing I'm cautious of is that some of the houses I bought, I was fortunate enough to be able to keep a lot of the houses that I bought in 2009, 10, 11, and I still have them today. And it was very nervous buying then. You would tell friends you're buying real estate, and they thought you're insane. So I keep, I like people to hear what people that are not in our industry are saying, right? And you can kind of get a little bit into that when you see an article in a main newspaper, the LA Times or something, because those aren't people that are like us down and doing it. If the homes that I purchased in 9 and 10 weren't even as good as the deals I got in 10 and 11, 10, 11 and early 12. So that was a prolonged amount of stuff that needed to be resold and fixed and bad debt cleared off. But I am a little cautious of when I do see the first best signs of buying. I'm going to still go a little cautious for the first 6 months, because there is a lot of the people that come into the club and that I speak to, they're all like, I'm waiting for it to crash. I got money. So I'm going to let their money go in and buy a lot of that stuff at the forefront. You're
going to wait for the Apple update, not the first front.
There you go. Thank you.
So Dan, what do you see for the rest of 2025?
It's pretty murky, Joey. I would say that political climate is very unpredictable. We don't really know what's going to happen. And without getting too much further into that wicket of fun, I think things are going to be generally kind of as is. It's a muddle through. I don't think we're going to see anything too crazy. There's the pressure to get the Fed to lower rates, I don't know if they'll be successful, but I don't think they can go that low either. We're not going to see 2, 3, 4%. The market doesn't justify it. So it's a muddle through, work your deals carefully, know what you're talking about, stay in your buy box, make sure you know for sure the exact neighborhood and house type that you're going for. And, it's because things are getting hard to predict.
Well, one of the things that we're finding in Florida is price ranges are affected differently. So in the 325 and lower, you can sell those all day long. You get into just under 700,000. That middle market is just really rate sensitive and market sensitive overall. Their investments are taking a hit right now, so they're kind of all putting a pause. And then you get into that 800 to 2 million, and those, if you have the right product, you don't. There's plenty of buyers for that, so it's kind of a weird time.
I would say we're seeing a similar thing in the South.
Sure.
If you've got a $2 million plus property, you're not having any problem selling it. But if you go at the low end, you're having trouble right now. So if people are in the market right now for, if they're doing flips, if they're trying to wholesale, things like that, I'd stay away from the low end stuff. I think there's still definitely a market for that middle and upper tier, but I'm not seeing it. I'm seeing a lot of struggle in that low end of the market.
You guys getting the same thing?
2.5 million and up sells easily around here. And then 350 and lower, which is our lowest stuff, maybe Coachella, maybe, down by the thermal, places like that, those sell. We're having a little more trouble in the middle, actually, is where we're seeing that stuff sit. That would be prices range from 5 to 7.
Yeah.
Somewhat similar. Yeah. The middle has been moving. So we're seeing a lot of folks, San Diego got a little too expensive. So there's a lot of pressure to move towards North County. We're seeing a lot more pressure in Vista and San Marcos. I used to be able to go up there and look for a short-term rental, easily 5-bedroom under $1 million, even 800, less than a year ago. And now they're around $1 million, 1.1 very quickly. So San Diego's feeling that pressure, and there are people trying to do something about it.
Well, two more questions as we're wrapping up. We've almost been at this for an hour. Wow. So I want to ask each one of you. So I'm Larry. I'll start with you. I'm brand new to investing, never been to a club meeting, and I show up. What is the advice that you give me?
Listen and ask a lot of questions, and then don't be nervous and afraid to call the folks that you like their answer. So some of the folks that I've seen do the best that have come through our clubs, actually come from nothing. I mean, one guy was literally a gardener that would climb palm trees and fell out of a palm tree, and in the hospital broke his back. In the hospital, he saw infomercials about real estate investing. Well, he's like, I don't have the money to do that. He's immigrant parents. His dad's a gardener. And he walked in our door and just started attending the club for no cost. He would call me all the time. And I loved helping the guy. And I would point him but he had the guts to pick up the phone and call. So Joey, if you're brand new and coming in, I'd say ask questions and don't hesitate to keep reaching out to people. If they're bugging you, they're going to tell you you're bugging me. But get what you need. Fight for you and for your family to learn how to do this.
Awesome. Lisa, all right. First day at LA South REIA. What are you telling me?
I would say the same thing you just said. And I would say, especially the people who are here with the clubs, we're here to help. I've never met a club owner that genuinely is not there to help their members and want their members possibly to avoid some of the same pitfalls they fell into, right? Because if they're successful, we're all successful, right? All boats rise together. So I want to see nothing more than my members' success. One of the things I would say that saddens me most about being a club leader is that oftentimes you've built rapport with your members for so long, so many years, you've taught them, you've been there for them, and then they go out and they do a deal, screw it up, and then they come back after the fact and tell you, oh my gosh, can you help clean this up? And that's so infuriating to me as a club member because we could have helped you avoid it in the first place. So I would encourage people who are brand new, get in there and learn, ask questions, but take action, because the best learning you will ever have is if you take action, but don't do it alone. We're there to help you and support you so that you don't make a stupid mistake. And we want to make sure that you succeed, especially in your first deal, so that you can go on to the next one and the next one and the next one.
Nice. All right, Dan, I'm at SDCIA for the very first time, and I'm brand new. What are you going to tell me?
I'm going to tell you to talk to people, see what they're doing today. What are the most common strategies that are being deployed, right, successfully, even especially if you're in the local market, not a REIA, right? But then don't pick one that seems like it's exciting or fancy or where they're making the most money. Pick something that resonates with your personality and your skills, right? I know a lot of people who walk into this who have no business experience. They've never made an offer on anything other than a car, maybe, and they don't really know how to get through the wickets and make it work. So there's different strategies. If you don't know hospitality, maybe don't do hotels or short-term rental, right? So get with somebody, mentorship, and learn those things. So yeah, pick something that suits your personality, that you can really deliver on, that works with the skills you have now, so you can get moving. You can change later; it's fine, right?
Pivot,
but then
pivot.
but then get to work, do the work. Even if you don't know what to do something every day, or any day you can. You never know how it's going to go. I think everybody here and anybody investing would agree that you're going to try 1,000 things and 2 of them are going to work, right? Yes. So just get at it and do the work.
And what I'm finding is the most successful are the ones that find a way to stay in the game.
Yes. Yeah. Just keep trying things. Take action all the time. Make offers, make offers, right?
Tenacious. You have to stay tenacious. Yeah. To not make it otherwise.
All right, Dan, I'll let you lead this. My final question is, okay, how does somebody get connected with SDCI? When is your meeting? Just tell us everybody how they can start going to SDCI.
You got it. So our website is sdcia.com. It's a wealth of information. Go there, check out the calendar, look at the classes and stuff that are coming up, check out our sponsors, and then come see us. The easy ones are the second Tuesday of every month at 4:30 when our networking starts for the main monthly meeting. And then the last Wednesday of every month, we have a beer night. We meet at Novo Brewing in Mission Valley. It's a free event. Just come meet us and get your feet wet. Let's go.
Awesome. Larry, how does somebody attend your lunch?
Yeah, so we're the third Wednesday of every month. And the easiest way to find us and put a little reservation in to let us know how many seats to tell the restaurant to sit out is to go to the acronym for the club. So the club name is Coachella Valley Real Estate Investors Association. So CVREIA.com.
Lisa, how does somebody get involved?
So we also have a website. It's actually being worked on right now, but it's LASouthREIA.com. And we are meeting the second Monday of the month, where our new format online is actually to start at 6 o'clock. Between 6 and 7, we have an educational segment. And then our club meeting starts at 7 o'clock. So for people who just want to attend that particular topic, they can come from 6 to 7. And then our club meeting starts at 7 and it goes until 9 o'clock with our featured speaker, or if it's a topic we're discussing internally. Best way for people to get connected is by sending an email actually to info@lasouthrea.com. And you can do that from our website or just info@lasouthreia.com. We'll add you to our list, and then we'll make sure that you're aware of all of the events that are coming out and how you can get registered for them.
Well, I can't thank you guys enough for jumping on with our show. So everybody out there, we have always been partnered with clubs that we feel that you can trust as an investor. Obviously, do your diligence. That's probably the first thing that I remember from going to all the clubs with Bruce. Is the first slide is, hey, remember, you're responsible for doing your own diligence, whatever. But these we're telling you to go to these clubs, and we're highlighting these clubs that we trust, and we would never speak at a club that we didn't trust. So that's why I'm having these folks on. Eventually, I'd like to highlight more, but we started out with the ones that you can go ahead and trust that they're not out there to steal your deals. They're not out there to figure out a way how to make money on you. These people are truly in it to help everybody, because when we help everybody else get what they want, we end up getting what we want to. So
Absolutely.
thank you so much, everybody. I really appreciate you guys jumping on, and we'll see you guys next time.
Thank you, Joey.
Thanks, Joey.
Thank you.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the hard money tab.